All right, let's get to some stories now. On the African continent, we see Fitch ratings. They're optimistic about recovery of Ghana's banking sector. They're citing stronger profits and improved capitalization following the challenges of the domestic debt exchange program, DDEP. The agency forecasts a brighter outlook as economic stabilization efforts progress. Fitch's latest report credits high treasury bill yields for driving bank profit over the past 2 years, helping restore capitalization after the DDEP-related losses. Despite the setbacks from the debt restructuring initiative, Fitch predicts most banks will meet capital requirements by the end of 2025. The sector's reliance on domestic deposits has also provided stability, shielding banks from liquidity challenges faced in other markets. Let's take it to East Africa now. See, the Kenyan government is moving to transition all counties to the treasury single accounts as a TSA to streamline public fund management and improve cash flow efficiency. The TSA is a unified system of government bank accounts designed to consolidate and optimize the use of public funds. As part of this shift, the government is also transitioning from a cash basis to an accrual accounting system to enhance financial reporting and strengthen the management of public resources. All right, so another conversation now. See, the Nigerian carbonated soft drink market is a major player in the country's beverage industry, dominated by well-known brands. However, despite intense competition, consumers have witnessed a significant price increase in recent times. Let's explore the factors driving the price surge, including the impact of rising input costs, government policies such as sugar tax, and the potential impact of declining global sugar prices. Well, join us for this conversation. We have Rosemary Ohira, an analyst with FDC. Great to have you, Rosemary. So talk to me about this price increases. 50 cl bottle of carbonated soft drinks, that increased by about 66.67% in the past year, surpassing current inflation rate of 34.80%. That seems to be a trend we see these days in the market. Tell us about this.
Good afternoon, Ladi. Thank you for having me. So the reason for the surge in the price of carbonated soft drinks, it can be attributed to two main factors. The first is currency denomination issues, while the second is the increased cost of production for manufacturers. So for currency denomination issues, for this commodity, just like any other commodity, it has to be traded at a price point that is both convenient and available. For instance, if a consumer goes to a retailer and wants to get, say, a bottle of Coca-Cola, the retailer buys this commodity in a pack of 12. So let's say the price for the entire pack of 12 is divided by the number of units in the pack. Let's say it gives the retailer a price point of 417 naira, and let's say the retailer wants to sell for 450, for instance. As a balance, the retailer has to give the consumer a 50 naira note and a 500 naira note if the consumer brings a 1,000 naira note. So this puts a strain on the transaction because most of these currencies in the lower end of the lower denomination are currently phasing out of circulation because of their significant loss in value. It is much easier for the retailer to give the consumer a 500 naira note for a 1,000 naira balance instead of a 500 naira note and a 50 naira note. So on the side of increased cost of production, in Nigeria, we've seen frequent devaluation of the naira against major currencies. And this has put an upward pressure in the price of factor inputs used in the manufacturing of this commodity. And with increased cost of production, manufacturers are likely to pass this increased cost to consumers in form of higher prices. So these are the reasons why the price of carbonated soft drinks have increased astronomically recently.
And talking about inputs, now we see there's a projection that there'll be a 6.8% drop in global sugar prices in 2025. So can we expect lower prices for these carbonated soft drinks in Nigeria?
Indeed, the price of sugar has been reducing since 2024 and is still expected to reduce well into 2026. But sugar is not the only factor input that goes into the production of this commodity. There are several other things like operational costs, cost of distribution, and other inputs like flavoring, the carbon dioxide, and all. So if the price of other inputs are increasing, we will not see at best we'll see the price of carbonated soft drinks being stable. At worst, we'll see only a soft decline, but we should not expect any major decline in the price of this commodity, except if the price of all other factor inputs are either declining or remain stable.
Right, it's quite interesting, when we see the prices of most of these global inputs, when they go down, in the global market, it doesn't seem to impact the cost of the product. When it's in the country, it doesn't normally go down, but we see the prices, take for instance, oil prices. We see oil prices, go down, but PMS prices still stay quite stable. They don't usually go down. So I guess that's the same dynamic there with sugar prices and most of these markets. But what are you seeing for sugar tax at this point? How do you see that impacting, the price of these drinks, going forward?
The sugar tax, we can look at it in three different ways. For one, price increase. The second is demand reduction. And the third is adaptation, or the need for adaptation in the market. So the sugar tax has caused an increase in the price of this commodity. So this has affected demand, especially for low-income consumers who are more sensitive to price changes. So this has caused a reduction in the demand of this commodity. So for producers now, this has created a need for them to re-strategize. So we have some producers producing at smaller quantities. So we have like those smaller PET bottles, while other consumers are reformulating their products to contain less sugar, so to mitigate the effect of this tax on their profit margins.
All right, we'll keep tracking to see. Hopefully, some of these prices just cool off and, consumers get a break in 2025. Thank you so much, Rosemary Ahira, analyst with Financial Derivatives Company.
Thank you, Ladi.